Let's talk some ETFs and continue to explore the idea of artificial intelligence, which has been behind the semiconductor rally, but not really many other places. Software hasn't proven itself out yet. There's a lot of talk about where it's going to show up in other sectors. Let's bring in Jeff Spiegel from BlackRock, as the U.S. head of iShares Megatrend and International ETFs. Jeff, welcome back to the show. Good morning.
Nice to see you, Oliver.
Appreciate that. So the AI trade has been explosive for semiconductors, especially NVIDIA, of course. But all the talk, is it showing up in other groups, or is it now like getting assumed by NVIDIA and NVIDIA alone, Jeff?
I think it's really broadening out, and that's where a lot of the opportunity is. So, we just published our market outlook for going into 2024, and I'll hit on some of the areas. The first of which is artificial intelligence and continued opportunity. But what we really note for investors is when you take a look at the average portfolio for investors in the United States and you examine what their AI exposure looks like, almost all of it is coming from mega cap companies. If you look at sort of the pure plays, the smaller names outside of the NVIDIAs and some of the others we often talk about, that represents less than 1% of the portfolio. So, our first thought on artificial intelligence is you need a basket of stocks. You need to think a lot more broadly than just these mega cap names, which, by the way, for most investors, if they just own the S&P 500, is already a big portion of their portfolios. So, in IRBO, our robotics and artificial intelligence ETF, there's about 100 names. They're equal weighted, and that can offer much broader exposure to the market in some of the names that haven't run up quite as much yet. I heard you were talking about semiconductors. From a downstream opportunities perspective, semiconductors remain attractive, but again, a broadening out of semiconductors. We think there's a lot of opportunities in CPUs, sort of shifting over from GPUs as the technology advances and we see new uses, particularly around edge computing. In terms of adoption of AI. So AI trade's certainly alive and well, but a lot more room to run maybe outside of those mega cap names. But would love to cover some of the other areas we think are primed for growth, which certainly have some linkages to AI.
Tell me about the standards by which you measure as you're building these ETFs and figuring out what goes in, particularly sticking with the IRBO for a second, because that goes multi-sector. The idea there is to get out beyond just where the concentration has been in the graphics companies. The standards, what does a company need to do to meet the standard of being labeled AI? Like, does it have to show up, on their earnings? Does it have to be a line item on a 10K?
So generally what we're actually looking for, and we use a very granular revenue classification system, is for a company to get more than 50% of its revenue from AI or AI-related activities, or just to be a major market leader in the space. So, the major market leader component is where you might include some of the bigger names that we often talk about, but that 50% plus revenue is so critical, and that's where often those names investors are really underexposed.
Okay. So the branching out, where does it take you? I'm looking at the fund right now, and you've got some interesting kind of sector breakdowns. Obviously, a lot of tech in there. Comms behind it. Industrials are the third biggest group. Tell me about that.
So industrials is a lot to do with the robotics trade specifically, right? So this is a robotics and AI ETF. And, there's a reason that we sort of put those things together. Robots without proper artificial intelligence aren't that useful. But when you think about the supercharging of robotics that can come out of artificial intelligence, a lot of the limitations today have to do with, for example, robots being fixed. Right? So they tend to be fixed in place because they're very large, very powerful, and you don't want them to be moving around and potentially harming a human on the factory floor or the warehouse floor. Artificial intelligence is really going to improve the ability for these robots to actually operate in a much wider sphere, to not have to be fixed, because we can have much better motion control and we can have much better effectively decision making with those robots. And again, all of that is exposure that's important in IRBO. But the other area that we really see as an opportunity, not just because of artificial intelligence, but it absolutely plays a role, is in healthcare. So, we've seen the AI trade really play out in some of the mega cap names and some of the semiconductor names, and even those broader names, those pure plays have done well this year. But when you look at places that investors may not be paying enough attention to, we think of things like neuroscience and like genomics. So our tickers there, IBRN, iBrain for neuroscience, iDNA for genomics. And, just to give you sort of a sense of some of the stats here, scientists actually just used AI to map a fruit fly's brain for the very first time. This is the first complete brain mapping of any animal ever created, and we're very going to quickly move towards human mappings. And AI is just accelerating this process for us to understand and trace neural pathways. In fact, we're 50 to 100 times better at it than we were previously. That's obviously a huge space for neuroscience to progress. And, I would argue for the last 20 years, we sort of had this revolution in understanding the human genome, which at the turn of the millennium, we didn't. We don't have enough understanding of the brain today. That's going to change, largely driven by AI. And more broadly speaking, drug discovery is largely a trial and error activity. It's iterative. What's really good at iterative processes? Artificial intelligence. So, we think that over 30% of new drugs by the middle of the decade could be AI assisted in their development, reducing costs and bringing people better treatment sooner.
Wow. Well, I hope the time of the brain mapping from the fruit fly to the human, I hope it takes a while to make that progress, because if it goes too quick, that might be a little disconcerting. Jeff, what's popular right now in terms of flows? Where do you guys see the most interest from people looking to put this trade on? Is it in some of the kind of auxiliary plays, or is the money still mostly chasing where the performance has been?
A lot of the money is still tracking where the performance has been. But, there is one other thing that we talk about in our thematic outlook, and I think it's really important for investors to know where flows are going here. The third area that we talk about is geopolitics and economic competition, which, I've had the privilege of being on your show a number of times. When we talk about these mega trends, we actually added one more mega trend or mega force in the last year, and that's geopolitics and economic competition. So to your question about flows, one of the most powerful tickers and flows, not just in total flow, but this thing brings in $50 to $100 million on average every single day of the week, is EMXC, our emerging markets ex-China ticker, which is also outperforming traditional emerging markets by about 5%. So that's a trade that investors are really moving into, in acknowledgement that China has to be treated separately in portfolios, given geopolitics, given economic competition, and just given its size in the traditional emerging market benchmark.
Yeah, and an interesting kind of unintended AI connection there too, perhaps, as we're literally now having our companies make separate chips for China. You got a fund that just takes it out, because it seems like we do need to kind of put them in their own basket right now for myriad reasons. So the fund then is going to be beating your standard EM fund, given how weak China has been, right?
Yeah, and so, it's not just that, right? When you link it back to AI, there's other countries like Mexico and India, and as supply chains are reorienting, these countries are going to be beneficiaries of jobs moving in. And Mexico in particular, work there, labor there is still more expensive than in a lot of Southeast Asia. So as jobs move into Mexico, more automation is needed, more artificial intelligence is needed to make sure that you can sort of increase the efficiency of the Mexican worker, or the American worker for that matter, to justify jobs moving over. So AI, automation have a lot of linkage to all of this. And that's why we think people are taking a more granular approach in thinking about emerging markets by buying EMXC or individual tickers like our Mexico ETF, EWW, or our India ticker, INDA, which have also had great years for flows.
Very nice. Interesting spectrum, beginning with the AI and finding some unusual places where it crops up. Appreciate the details and the update on what you guys are seeing. Thanks, Jeff.
Always great to be with you.
Yeah, a lot of fun research and good work being done by BlackRock's Mega Themes team on some of the potential use of AI.